Holy moly, what an incredible day in the markets. Can't wait to get into today's show. You're watching the Daily Stock Market Brief. My name is Michael Silva. I do these videos Monday through Friday. That's 5 days a week. We look at the indices. We look at commodities. We look at indicators. We look at the dollar. We look at a bunch of things just to really help us determine what might be taking place in the markets. Got a lot to talk about and just some housekeeping going on right now. First off, I posted a video the other day and I said, hey, if it gets 2,500 thumbs up, I'm going to be launching out all my stock market signals and indicators onto my website. Just so happens that we crossed that threshold the other day of 2,500 likes on that video. Wasn't expecting it, so thank you for all of that. I will be posting those up here within either tonight and or tomorrow, getting those onto the website, and I'll be letting everyone know. It's just going to be linked on my website, probably in the description below this video or the videos to come out in the near future. The next thing that I want to talk about is my interview with Michael Gayad. That will be coming out tomorrow. It has been uploaded, but now I'm just working out the timestamps. It's an extended length interview with a lot of good information. I can't wait to get that out. With all that said, let's just go ahead now and hop in to today's show. All right, welcome back. As you can see, mostly red across the board today, except for the NASDAQ. The NASDAQ has been a strong player. Now, when you look at this, though, what are you thinking? Well, it's only down not even a percentage point. It's nothing to worry about. Nothing to worry about, folks, okay? Pretty small down day until we get into the charts. And then I'll show you why this is a little bit worrisome. But before we do, let's look at the sectors. Look at energy, completely beat down. This was actually as to be expected, and part of me believes that energy could be one of those buy the dip type moments, because on relative strength, energy has been actually quite weak relative to the SPY. And we all know this. Energy sector's been getting beat down for 3 or 4 or 5 months now, just getting completely hammered. But now there's a lot of people looking at this because we're starting to bid up some strength. So on these dips, we very well might get bought back up on that sector. Be on the lookout for that if you're looking for some energy stocks. The other day, I called that out. I said, hey, I called out the positive divergence right here. That was in October, basically when we hit around this bottom. Now it's time to call it the negative divergence. We hit an all-time high, but with less strength on the RSI. And what do you know? We fell 3% today. So there might be some more downwards room to go, or we might still track around in this 50 period for the RSI. Interesting. Let's go into the S&P 500. Daily time frame. Now, why am I saying that? Yeah, it was a small down day, only 15.97. That's down less than 0.5%. But what's so interesting about the price action today was the big gap up in the morning. Not to mention the relentless ramp up higher, and then all of a sudden it just fell off a cliff and closed on the low of the day, completely engulfing yesterday's body, or the last trading day's body, and closing below the 5 EMA. Mind you, yeah, we still have this gap below us. We have the 20 period that was tagged, and then we also have this area of support. So the bears still have a lot of work to do. We have a lot of interesting things taking place this week. Not necessarily sure if you want to go get super worried about right this particular point in time, but this does kind of look like it's topping out a little bit. But like I said, we have option expiration, I believe it's this week. We have the Fed meeting this week. We have just all kinds of stuff that could potentially happen. So be on the lookout for these support levels to potentially get buttoned up. If we start continuing this move down, let's look at the lower Bollinger Band and this gap here for a potential even stronger bounce point. But we'll get into that if it gets there. On the 30-minute time frame, we're still within this channel. Down here, we called out what? We said, hey, I don't know if I did it on the market brief, but I definitely did it on Twitter. Said this, looks like a good hedge long position. And then we started bouncing from that area. We woke up the next day and then boom, this big green candle I posted out, boom. And then as soon as I did that, right, that was a good little ramp up there. The RSI got into that overbought territory and then jammed all the way back down. You can just see the aggressive move. But what do you also notice? Well, we haven't closed a low lower than this previous hit, which is like 36, 35 range right here. So until we break this area, then that would put in a lower low and a lower high, which could mean that we're seeing a trend kind of shift. I want to take this moment and remind everybody to go ahead and smash that thumbs up. That's me in 20 years because I'm a trader. Let's go to the Dow Jones. The Dow Jones. This is kind of interesting, right? We posted this on the last market brief. We said, hey, we have this price action running into this area of resistance, and we drew this wedge out. Well, I just wanted to call this out again. That was the weekly time frame, but Sven Henrik came out and also called this same exact pattern out that we also posted. So, you know, pat on the back over there, especially if he's seeing it. He's a really, really, really good trader. All right, then what do we see on the daily time frame? Well, we have this rising wedge that we've been saying, hey, it's coiling up very tight. It's been 4 or 5 days, you know, trading days since that video said, hey, it's coiling up tight. What do we have here? We closed below it, okay? But we're also pinned right there on the 20-period moving average, so it's still an area of support. If we start breaking down from these areas, look at the lower Bollinger Band for an area of support. That could very well get bottomed up right next to these gaps. But if we have continuous selling, it could get very, very aggressive to fill even more gaps. You look at the MACD crossing over, that is bearish. Still above 0 though, so, you know, don't put too much weight on it. And then you have the RSI still trending above 50. All right, on the 30-minute time frame, that rising wedge, we had that positive divergence. We shot up, boom, boom, and then we broke down through the bottom of it. So, yeah, we might get continuation to the downside, but nothing is guaranteed this week because of all the news that could potentially come out. From this standpoint, though, I'd be looking at specific gaps that you can potentially buy into to play somewhat of a long hedge position if we continue to get overextended. Got to be careful in these environments. Make sure you have stop losses in place. Let's look at the Russell 2000. Here we go, rising wedge, a lot of gaps, okay? A lot of gaps, a lot of unstructurally sound, am I saying that right? Movement in the markets, this relentless just kind of drift higher. These guys are still, the Russell 2000 small caps are still performing quite well. Had the big gap up today, and then we closed up just slightly on the day still, okay? So we didn't even close down on the day, but it's still a negative bearish type looking candle closing on the low for the day above the 5 EMA, so the bulls still got control of this. Okay, then we look at the 30-minute time frame. So you know what? Let's just go to the 2-hour time frame. The 2-hour time frame. This is what's interesting, folks. And I remember getting a comment about this. Why do you try to predict a negative divergence? It's because it's not predicting. It's preparing for a situation that could potentially happen. And what do you know? We got gapped up on. We gapped up. We moved higher to make a new all-time high. And what do you know? It was on the negative divergence that we drew out last week or the week before. And it was probably earlier last week. Okay, as soon as I noticed that, and it was the RSI was up in this range, and then we had this negative divergence, I shorted it. Okay, I shorted right out of the gate, and then I captured some points on the way down. Quick little hundo, you know what I'm saying? Little $100. I'm not even calling it $100. I'm going to call it a nice pair of gym shoes because I got to get healthy in 2021. I'm tired of eating mac and cheese and a lot of butter noodles. All right, NASDAQ 100. Let's get into this one. NASDAQ 100 still technically finished strong for the day above the 5 EMA. We gapped up. We did not fall apart like the S&P 500 or the NYSE for that matter. Let's look at the daily candle. The daily candle is an inverted hammer. Sometimes, just like this was a hammer candle, and we bounce. Inverted hammers on moves up can sometimes pull back. All right, it's in the bull's favor right now though. So let's be patient here. Let's see what happens. If this continues to move higher, maybe we make a new high on a negative divergence, but I'm not as confident because this reading right here was not as extended. On the MACD though, crossy, that's bearish. Still above 0 though, so whatever. Let's look at some indicators now. Well, the VIXy. The VIX right here, crossing up, boom, 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 up 6%. Look at the RSI, above 50. That is some volatility increasing. Is it going to continue? Maybe. And what I want to point out here, which I don't think anyone's going to be pointing out mostly, because a lot of people don't overlay the Bollinger Bands on this. But notice the Bollinger Bands, how they're contracted right here. All right, and we had the falling wedge, and then it got the Bollinger Band here, lifted up. This Bollinger Band lifted down, okay? Went down, lifted down. We contracted pretty tightly, and then we're starting to move above, okay? Look what happened here. Contracted, got really tight. We saw that big green candle, and then boom to the upside. Right here, okay? It started contracting very tight. Boom, to the upside. Right here, not contracting as tight, but it was still contracting tight. And then it, boom, to the upside. So I found that interesting that when these Bollinger Band, the upper and lower, start getting closer and closer together, all of a sudden we have some sort of spike in volatility. Does that mean it's going to happen again? No, that does not mean with certainty. But it can at least allow us to be prepared for that possibility. My target was still 27.50. I think we can hit it. I think we hit it this week. But keep in mind, we still have this gap below us, and we have the Fed coming out. Who knows what they're going to talk about? Literally don't. Let's look at the CPC, smooth over 10 period, smoothing mirror. 10 period moving average. This is our warning signal, a sell signal. We called out the double bottom. The indicator started turning up. It has not crossed back above the red line, which means it's not giving us much information. But we bounced from an area that we did in September, and then we started seeing that big downdraft. Can that happen again? Yeah, it can. But keep in mind, we really just got to use it when it crosses above the red as that sell signal. And by a sell signal, I don't mean go short the market. That's not what I mean. But what I do mean is, hey, make sure you have protection in place for potential moves to the downside. Then we got breadth. Oh my gosh, it's negative, minus 12. We had that down day. That makes sense. All right. It looks similar to 2018, but we had a lot more breadth here. We had that negative divergence. We're starting to see the pullback. Is this going to be a big spike to the downside? Potentially. And if it is, guess what? If we get down to this 80 level, you best believe that I'll be buying up some shares right down here just because it seems to bounce from those specific levels. So we got to be mindful of that. Okay. It doesn't mean, right, it doesn't mean that a crash is taking place, all right? As much as some people want to believe that, you're bearish, you're bullish, you're this, you're that. Just play the market for what it is, It's that easy and that difficult at the same time. Let's go to commodities. The CRB, okay, we're still moving higher. The higher this goes, the lower the dollar typically goes, okay? They work inverse to one another. We have a negative divergence, all-time high. There's a new close. Well, not an all-time high, but a high currently on this specific chart. The all-time high is higher than this. It has not recovered from the February crash. On a negative divergence here, though, we had this kind of bull flag structure. We're above the 5 EMA. We were pretty red on the day. So this looked like a very bearish candle and then started getting bid up once it tagged the 5 EMA. So we'll keep an eye on this. It looks like the MACD wants to cross back up. Maybe this move continues to the upside. You look at gold. Gold's not doing much. We closed lower, down 1150, but we're still within this coiled pattern. And the 200 period moving average, take note, where is it at? It's right here at the bottom lower portion of this trend line. And we pretty much tagged it today, very, very close. So, hey, maybe we might start finding support here, or, we might break down further. The area that I'd be worried about breaking down from, not worried, I should say, actually, I'd be excited because I want to get gold for a lot less than, where it's at right now. I would like to pick up more. I think that in 10, 20 years, no matter what, I'll be wishing that I had a lot more. Right around 1780, just a little bit below that. If it cracks down that means it's putting in a lower low, which can mean this trend can continue to the downside. Right? It's been putting in lower highs. If it puts in a lower low, that means it continues. After we start breaking back, we start making a higher high than this previous one, then a higher high to this one, that could signal that the trend is definitely changing up. Also take note that we have kind of a left shoulder right here, inverse, okay? Left shoulder, head. Maybe this might build out a right shoulder, and then we break through that neckline, and that could shoot us higher. So something to look at. I'm not putting too much weight on it though. Silver's just not been doing anything. 2350, right? Just above that is holding as support. You can see these little lower wicks getting bought up. Still below the 50 period moving average. This is getting tighter and tighter. It's probably preparing for somewhat an aggressive move, either 1 to the upside or 2 to the downside. My personal bet would be to the downside only because the dollar looks like it wants to bounce here. But I could be wrong, right? We'll get into the dollar shortly. Bitcoin, I had this as a target area. We missed it by a percentage point, maybe, and then we're starting to bounce up. I don't know where Bitcoin's going, but what I can say is if we make an all-time high again, it's going to do so on a negative divergence for whatever that's worth. MACD looks like it wants to start crossing back up again. This can go a lot higher. It could. So, yeah, let's go look at the dollar. The dollar broke below that 90.50 today, but got bid back up. So what does that mean? Well, look at the MACD starting to cross itself back over. It's still below zero, so don't hold too much weight. And then you have a positive divergence on the daily. New low, higher low. So that means it's making a new low on less strength to the downside. All right, so we have strength coming in. This is a hammer candle, which can sometimes represent bounce points. Now the dollar is relentlessly weak and in a weak trend, but sometimes it takes, in order to change a trend, you need to change the trade. So the trade needs to be bullish. Right now, it doesn't really honestly look completely bullish, but there's the potential for it to bounce here. And we got to be mindful of that. And you look on the weekly time frame, it's in this falling wedge, lower Bollinger Band in an area of support, positive divergence on the MACD, positive divergence on the MACD and the RSI. All right. So the possibility for a bounce there, you know, it's not. I'm not trying to say it's probable, but the possibility is definitely there. And interestingly enough, we made that video called "Watch the Dollar." Guess what? Sven Henrik came out with an article today, said dollar watch. Interesting. Read his article because he's better at explaining things than I am, and his charts are always typically better than mine too. Let's get into bonds. Bonds still ping-ponging around in this little channel here. It almost got to the top, you know, down just a slight bit, but you can see how it gapped down and kind of recovered. All right, so we'll follow along with that. On yields, they didn't do nothing. At least 30-year, we're pretty much flat. We're still within this little higher low trend, below 1. In the interview with Michael Gayad, he's going to talk more about yields, the bond, and intermarket analysis, which I'm extremely happy about. Conclusion. I just want to throw up this chart really quick, the NYSE. That is one nasty candle. And I'm showing the NYSE because it's a broad index, all right? So we gapped up basically at the high and then closed at the very low below the 5 EMA. Look at, overall, the market has made an overextended move. It got ahead of itself a little bit. So to see days like this where it might pull back 5%, 10% in a week or a month or whatever the case is, would be actually healthy for the market. It needs to take a breather in these areas. If it continues running rampant and making more gaps and just straight vertical in the air, that's when things get very, very difficult to navigate. Not to mention, it's been very difficult to navigate basically since November. Feels like a year right here from November to where we are now, but really it's been just over a month and a half. And I mind you, okay, this is not structurally sound. All these gaps on the way up and then just completely drift higher. So now we're starting to see the MACD crossover. We're starting to see the RSI point down a little bit. We're starting to see a little bit signs of weakness, but we still have a lot of stuff that can shoot us higher. The euphoria is still there. The extensions are still there. The sentiment is still bullish. The breadth is still not really bad at all, right? We have the S&P 500 over the 200-day moving average. There's like 91% of the stocks above it, or 90% now. So you got to understand that everything is still extremely bullish. Now that really, from a contrarian standpoint, means if everyone's bullish, the money's been made on that side. So the big money might be on the other side of that trade. However, there's still stuff pointing to maybe potentially new highs and continuation. But keep in mind, and we'll talk about this on the interview, things can stay overextended for a long period of time. So we need to be mindful of that. All right, everybody, that's all I have for you on today's Stock Market Brief. I'll see you later.